Alright, so welcome to the second video of Chapter 4. So we're going to now complete that worksheet that we've started in the first video. So where we left off, we had our trial balance columns and then we had made our adjustments in the adjustments column, and notice our new accounts that we added here at the bottom. Now we won't have to add these every period because now that we've used these accounts, they'll appear. And so next month or quarter or year or whatever, they'll appear on the end. So now that we're ready to do what's called the adjusted trial balance. So that's just summarizing the information on the trial balance and then updating those accounts that need to be updated because of the adjustments. So if we had a debit balance in the trial balance and then an adjustment of the debit, we'll add those amounts together. If we had a debit balance in the trial balance and a credit, then we'll, in the adjustments column, we'll subtract those. And then the same way before, if we had a credit and then a debit, we'll subtract. And if we have two credits, we'll add. So just like we do in the T accounts, we're going to do the same thing in the columns now. So notice here, so cash didn't have any adjustments, nor should it. There should never be an adjustment to cash. So that balance we just carried over, debit column to debit column. So debit column to debit column. Accounts receivable didn't have any adjustments, so debit column to debit column. But let's look at computer supplies. It had a debit of 600 and a credit of 500. So I want to do just like I do in the T accounts, subtract those because they're on different sides and put the balance on the largest side. So since the debit side was the largest, I'm going to say 600 minus 500 gives me a new $100 debit balance. Prepaid rent, same thing. I had a debit of 1,200 and then adjustment as a credit of 400. So I subtract and then put it on the larger side. Notice computer equipment didn't have any adjustments, so that one just carries straight over. Same with accounts payable, capital, withdrawals, revenues, the graphic design fees, but office salaries, here we had a debit of 1,300 and another debit of 350. So since those are on the same side, I want to add them and then put that total in the debit column. Advertising expense, telephone expense didn't have any adjustments. And then my new accounts, I'm just going to copy those over into the correct column. So now I add up all the debits in the adjusted trial balance column, and I add up all the credits and make sure that they balance. If they don't, I've made a mistake somewhere and I need to go back and find it. So just to review our normal balances, I know that we all know our normal balances because of aid reveille or all reveille, but just to refresh our memory, we have our normal balances listed here, but then also remember what accounts appear on what financial statements. So revenues and expenses are on the income statement. So typically these are going to be at the bottom of your worksheet. So our revenues and our expenses, these are all on the income statement. And then assets, liabilities, and our equity accounts, capital withdrawals, those things, those are going to show up there on that balance sheet side. As well as, don't forget our new accounts down here. We added our contra asset, which is on the balance sheet, and then our liabilities. Remember, contra assets have an opposite balance, so they have a normal credit balance here. So now I can create a faux or a pseudo income statement. Again, this is not the real income statement, but I can create like a pretend income statement on the worksheet. So I'm going to pull all of the accounts that appear on the income statement into the income statement columns. So I pull revenue, that's my only credit account, and then I pulled all of my expenses over. Notice now I put a single line to subtotal. I added up my revenues, which are my credits. I added up my expenses, which are my debits. Now these don't balance, nor should they, right? We wouldn't expect the income statement to balance. So the difference between the credits and the debits is my net income. So I had credits, revenues of 8,000, debits, expenses of 3,100. So my net income then is this 4,900 difference. So I'm going to put that on the debit side, and then I re-add and make sure that they add up. So now I'm going to look at the balance sheet columns. So I'm going to pull over only those accounts that appear on the balance sheet and make sure that you get them in the correct columns. So in the debit column will be the assets and the withdrawals. In the credit column will be the liabilities, the capital account, and now that contra asset account, accumulated depreciation. So I'm going to pull those over, make sure you keep them in the correct accounts. Remember, we're pulling them from the adjusted trial balance column. That's the account, the column that we're pulling them from. And now I'm going to add those up. So notice here my debits total 18,680 and my credits totaled 13,780. Well, goodness, that can't be right. The balance sheet has to balance, right? But the thing that we haven't taken into consideration yet is that net income, which is going to need to be added to the balance sheet through that retained earnings account, through that capital account, right? Now, we skipped the statement of stockholders' equity when we do the worksheet. We're going to do the statement of stockholders' equity, and we'll see that in the next video. It's just that the worksheet skips that part. So what we have to do is add the net income to the credit column here, because the net income increases capital, which is in the credit column. So I'm going to add it, and notice that the net income was in the debit column of the income statement columns, and now it's going to be in the credit column of the balance sheet. So when I add that net income, notice now that they both balance.